So what exactly is life insurance? Some of the very, very important part of the financial plan. It is very, very important for your family life and individual life as well. Okay, so term insurance, as it says that term, when we come to this part of the world, we kind of new in this country. We want to own a house even sometimes. We save money for buying the home. So today we're going to be talking about very, very crucial part of your financial planning is life insurance. Hi everyone, welcome to my channel Prasoon Srivastava Financial Planner, and if you are first time on this video, don't forget to subscribe and hit the bell icon. So in my videos actually I talk every week some of the very, very important part of the financial planning, and it is very, very important for your family life and individual life as well. So today we're going to be talking about very, very crucial part of your financial planning is life insurance, and we're going to be talking about what kind of life insurance policies which we get, how it is important, and what kind of a varieties. Like, we're going to be going more deeper inside to understand what kind of a concept of life insurance. I know life insurance is a very broad word to understand. I'm going to be talking more detail about that. So what exactly is life insurance? Life insurance is a kind of a monolateral contract between the client and the insurance company. So why I'm talking about monolateral contract? So monolateral means like insurance company cannot cancel this contract once it is given, but client can anytime cancel this contract. So for example, if you buy a policy today and a year from now you think of, no, it's not my use, you can cancel it, but insurance company cannot cancel. That's a monolateral contract. And what you do actually buying the life insurance, you pay a regular premium, and that premium will ensure a kind of a certain death benefit depending upon how much you buy it for. You get the life insurance coverage, and God forbid something happens to you, you die, whether it's been an accident death or natural death, you die somehow. So your beneficiary in the contract, which you have given the definition to, whether it be your wife, your kids, whosoever it is, if you have given the definition of the beneficiary in your contract, means your life insurance contract, when something happens to you, your beneficiary will receive a tax-free lump sum from the insurance company. So now let's talk about one of the very, very talked about insurance called term insurance. And term insurance, as it says that, for certain term. So term insurance is basically we buy for certain term of insurance. Maybe the period could be 10 years, 15 years, 20, 25, 30 years, whichever the term you decide, you can buy the term insurance policy. The term of the contract, the premium is guaranteed, and during the time of the contract, if something happens to you, your beneficiary get paid the tax-free lump sum. Okay, so term insurance, as it says that term, for certain term actually. And now I'm going to tell you like which of my clients I would suggest to buy term insurance. When we come to this part of the world, we kind of new in this country, and then a lot of aspirations are there. We want to own a house even sometimes, and we save money for buying the home. So what happens in the scenario, everybody knows that when we want to buy a home, we go to the lending institution, we get the mortgage actually. So to cover the mortgage, so for example, if we buy $1 million home, we go to the bank and we go to the bank and ask like they lend the money, right? So suppose financial institutions say $800,000 of mortgage, then we say, okay, how long the term is? Say 25 years of term for the mortgage. Then I suggest, okay, you know what, Mr. Smith, you should buy 25-year term insurance because of your mortgage is connected with the kind of term. So at least as long as your mortgage is there, you are protected. In the event, God forbid, something happens to you, your mortgage is paid off by the way of all the money your beneficiary will receive, and they pay off all the mortgage to the lending institution, and your family is free of all the debts. That is the most important thing to understand how the term policy decides. Another way of buying term insurance that a lot of my business owners clients, so what they do, they're working as a partnership. So very important to buy how to fund this agreement, like buy-sell agreement. So suppose two partners are there and they want to purchase another person's share, and they think, okay, I'm going to be working for next 10 years or 20 years. For that term, both people buy insurance on each other or by the corporation, and that time we suggest that buy a term insurance. It's a cheaper option. Your company can fund it. That is one of the way that we tell my client that, okay, you know what, you should go ahead and buy the term insurance.